All right, it's time for a market update, and this market could get ugly very quickly. And I say could get ugly because we will need to follow price here very closely because we did get a breakdown, which could lead to a bear trend. So we're now in the month of November, which means we only have 2 short trading months left, and then this whole entire year is over. And for everybody trading with the Stocks channel, we have already had such a great trading year. So in the next 2 months, just don't do anything to ruin that. Be very careful here, and that's exactly going to be the message tonight about all of the risk that the market is showing right now. And I'll give you very clear levels to pay attention to. But I also want you to go into Thanksgiving with an open heart and thinking of others. And while we are doing very well, don't forget to give back to those that are not doing so well and those that can use your help. Please be very generous. One of the last things Jesus said before he was crucified was in John 13, verse 34. So now I am giving you a new commandment. Love each other just as I have loved you. You should love each other. Your love for one another will prove to the world that you are my disciples. So remember to spread that love, be very generous with your giving, and always be willing to serve and help others that are in need. Think about how much better this world would be if we all just loved each other a little bit more and served each other instead of being greedy. All right, so first I want to look at SPY, and I've been talking about this being a bull trend until it's not. And I was focusing in on a lot of that Friday, October 10th price action because we got impulsive selling. And I told you if we were going to lose the bull trend, we needed that lower high rejection and breakdown into a lower low. And that was going to be a risk off look from price. But as you can see, we never got that. We got the higher lows and we continued to push higher to that brand new all-time high. And in the most recent update, I told you this was actually a form of a blow off top, which was going to put in a very important top before a market correction. Even though we don't know exactly when that top was going to be, we do have something from price we need to pay very close attention to. And looking at SPY, that starts with the price action that we had on Thursday, October 30th. That was a form of impulsive selling that did bounce to a lower high, and then that lower high did break down into a lower low, and this is a very concerning look. So to be very clear on SPY, there is a very important level, which is a breakdown level below 679. And today SPY did bounce with a green candle, but as you can see, there's a giant wick at the retest of that breakdown right there between 679 and 680. So what I want to warn you right now is this is extremely risky if you are going long here, because from here we could have just put in the next lower high today before a major impulsive sell-off, because usually when you're getting lower highs, you are building up the potential for a very impulsive leg lower, and that could easily break SPY down below the 670s and push us back down to 660. And then of course, if we get enough impulsive selling, we could just continue to take an elevator down, which is exactly what you expect to see when a blow off top completes. Now, if the blow off top has not completed and we can get back above 679, then it's completely fine that this was just another higher low within the bull trend, and we just continue to push higher towards that next new all-time high price target at 696. Now, to put this extremely clear for you, that is all going to depend on what happens at this one level here on SPY, which is, let's call it 679. If we can get above that and hold above it, it is completely fine to stay bullish. But right now, this is looking extremely risk off, so be very careful, because more than likely, we're going to at least come down and fill this gap just below 673. And then if that happens, we have another lower high followed by another lower low, which is only starting to build up more and more of a bear trend. So remember, we only follow price action on this channel, and right now price action is telling us to have very good reason to be risk off here, while SPY is specifically having price action below 679. If price action can get back over 679, then of course we're looking a lot more risk on. But again, we need proof through price that that is the case. Right now, I would be extremely defensive and extremely cautious because of the risk of that elevator down after a blow off top, which means if we blew off the top and the top is in, we are going a lot lower very quickly. And of course, we're getting that direction through confirmation in price with that lower high, lower low breakdown while we're below 679. So to make it very clear, everything revolves around SPY 679 right now. And I am suggesting you be very cautious and risk off while we are below it. That is how I see the market right now. I think there is a lot of risk in the market, which is why I'm making this so evident and so clear that I would view this as risk off in its current situation and only getting more risk on in a more bullish way if SPY can get back above 679 and more importantly, stay above 679. If we just peak above 679 and get rejected again, then you're going to see another drastic sell-off. And I don't think we'll even hold the support right around 672. I think we'll at least go to 660 and then 650. So all eyes on SPY 679. I hope I made that very clear. I probably said 679 at least a dozen times, and that was on purpose because that's how important that level is going to be. So next we need to look at the NASDAQ 100 and we'll look at the triple Qs because we had the same exact thing happen as SPY where we hit that brand new all-time high price target and then we got the impulsive rejection on Thursday, October 30th. We bounced to another lower high rejection and then broke down to a lower low when we broke the low of Thursday, October 30th, which was the breakdown below 626, and below 626 we had another rejection today in price even on the bounce. That was a rejection which is evident by the wick on the candle. So we filled the gap at 618.42 and we did not fill the gap down here at 611.37. So what could happen is even if we did go a bit higher to fill this gap to the upside just below 630, that could be the next lower high before we come down here and fill this gap at 611. So again, these are all starting to look like lower highs and lower lows if this is the price action we get. So to make this very clear on the triple Qs, I will stay risk off, which means I'm not looking for any strong bullish moves in the price action unless we can get back above 626 and hold above 626. Remember, if we just get back above it to close the gap to the upside and get rejected, that is still going to look like another lower high rejection within a bear trend heading lower. So that is why it's important that even if we get above 626, that you have confirmation we're holding above it. So if you're going long above 626, you are immediately getting risk off again if we break back down below it, because this would be a typical lower high, lower low rejection. And that would at least send us to 611. And then below 611, we quickly go to 602. So again, these are blow off top scenarios. If we are going higher, we are going to get back above 626 and break above it and hold above it. And in that scenario, obviously the bull trend continues because there is still the possibility, of course, this is another higher low. I'm not saying for sure the bull trend is over, but if you are going to be looking for a bull trend, you want to see the triple Qs holding above 626. And above 626, we could still get rejected at this gap fill just below 630, but above that, then we will likely go higher to a brand new all-time high at 641. I'm not making any predictions on which one of these plays out. I am personally just going to stay cash heavy and then react to price. I really couldn't care less about trying to guess which one of these is going to be correct, but I'm definitely in a risk off state with a lot of cash with this current market situation. I also want to look at Bitcoin. As I've said many times, this is a great indicator of risk on or risk off sentiment. And I was warning on Bitcoin that if we broke down below 107,000, then we were easily going to 102,000 and this support trend line, which was going to bring us to about 98,000. And all of that has happened in the past few days. But what you have to look at now on this chart is this is a giant head and shoulders rejection pattern. So while Bitcoin is below this neckline at 107,000, we are more than likely going for this full measured move lower, which is easily going to send Bitcoin down towards 87,000. So I don't think the pain in crypto is over just yet. And more than likely, we could have even seen the top in Bitcoin for the next 3 years or so. So all of these price targets people are throwing out around Bitcoin going higher is very risky because not only is Bitcoin looking extremely bearish through the price action with this very obvious head and shoulders breakdown below 107,000, but it's also below the 200 daily moving average, which has been extremely bearish for Bitcoin in the past. And while Bitcoin is looking like all of this bearish price action, there's people throwing around price targets that Bitcoin is going higher towards 200,000. And I've even seen absurd price targets that it's going to 1 million. Be extremely cautious following those predictions because they don't match anything that I have ever seen to be true on crypto, which is that more than likely crypto has already reached a top in the year 2025 and is about to go into an extremely nasty bear market over the next 2 to 3 years. Now, if I'm wrong, that's completely fine, but price will have to prove me wrong, which means we need Bitcoin to get at least back above 107,000 and starting to build higher highs and higher lows again. And all I see on Bitcoin are lower highs and lower low breakdowns with extremely bearish looking price action, which is only confirming more and more risk off sentiment, which could easily work its way into the stock market. At the same exact time, we are seeing risk off lower highs and lower low breakdowns in the S&P 500 and the NASDAQ 100. So I would take this very seriously. It is completely fine to just be very cash heavy. And as I said in the introduction, do not do anything to risk losing your year's profits. We have been having a very successful and profitable trading year, and I would hate to see any of you getting greedy at a time when the market is starting to look risk off and absolutely dissolving your profits into the end of the year and having nothing to show for it by the end of the year. So be smart here. Always have risk management at the forefront of your trading plan. And right here, looking at SPY, we have a lot of gaps to the downside. And as I've said before, a lot of these gaps are going to fill at some point in time. And all we do not know is at exactly what point in time that's going to be. And when price is starting to look risk off, that is a perfect time for gaps to start to get filled to the downside. And always keep in mind what I said about the blow off top scenario leading to an elevator down, which means with 2 months left in the trading year, for all we know, they're going to be extremely bearish months. And if you're still just blindly buying dips because it's worked all year long, you could still have a very nasty end to your trading year. So don't be that guy or don't be that lady. Make sure risk management is at the forefront of your trade plan here. And right now, everything that I just showed you is still saying we need to stay risk off until price can break back above these critical breakdowns, which are looking more and more risk off with the current price action. I will remind you, it is still a bull trend until it's not. That doesn't apply on Bitcoin, obviously, but looking at the indices through SPY and the triple Qs, it is still possible the bull trend is intact. We don't have any major breakdowns other than a very early warning sign from price that we could be getting into a risk off market. And then finally, I'll leave you with an update on our performance. We are currently up 29.72% year to date, sitting at a brand new all-time high, and I'm very comfortable being here. And as I said before, I don't see myself taking too many high risk into the end of the year. Of course, we're still going to trade any volatility that we get and take advantage of any opportunities, but all of that is going to be through the lens of risk management first, protecting profits and making sure we don't ruin a great trading year. You can have the same exact performance because this is my trade alert service called TSC Trade Alerts, where you get all of my buy and sell alerts for the exact percent allocations that I am taking for either the TQQQ or the SQQQ, depending on where I see the market going. And all you have to do is simply match those alerts and trade with me, and you will have the same exact performance. If you want to trade along with me, this is the best way to do that, and you can find out how to join by clicking on the link in the description of this video. So remember, Thanksgiving is coming up. We have a lot to be thankful for. Do not forget to love each other and help those in need. And as always, God bless all of you.